KKM Financial founder and CEO Jeff Kilburg has our trades today. It's good to see you, Jeff. And what would you do with PayPal?
Hey, Kelly, great to see you. And I want to be a buyer here of PayPal. And yes, you're absolutely right. Just 2 years ago, you saw the price of it, above $300. So it's dramatic to see that big of a move down. But growth, expectations for growth this quarter are about $7.27 billion. That's up from $6.8 billion a year ago. But I think you have to understand that who owns this stock? Who's betting that this stock is going to come back? It's institutions. It's got a very high concentration of institutional ownership, near 75%. And I think when you talk about what PayPal was, let's remember going back to the X on top of the San Francisco building right now for the formerly known company as Twitter. X.com was the precursor to PayPal. So there's a lot of synergy. I think there's a lot of upside if Mr. Elon Musk decides to get a little creative about this $84 billion market cap company. But I want to own PayPal here. I think the technicals are lining up. It makes sense to take this for a trade, Kelly.
I'm not even going to go in the direction of what, but it is fun
to trace. I put it on the rim for you.
No, but the ecosystem from the Musk, from that original, because then PayPal launched Palantir. And anyway, this one, while it's only up 2% year to date, that is a good point about institutional ownership, and that'll be something to watch. Kind of the flip side for Robinhood. That's the retail investor platform, also reporting after the bell. July was the best month ever for the stock, believe it or not. It's up 52% year to date, but still down about 70% from that IPO price. We'll see how consumers traded equities and, of course, crypto, as both have resisted the threat of major downturns and face a lower volatility environment. What do you think about Hood, Jeff?
Well, back at the Board of Trade in Chicago, we talked about selling with both hands. This is a sell, and I don't like Robinhood. I mean, let's look at the largest fine ever from FINRA was delivered to Robinhood of $70 million. Prior to that, they had fines for misleading, for outages, tens of billions of dollars. The SEC was a $65 million fine. So I think at Robinhood, yes, I think we can applaud the fact that it bounced off $8 back in January, and it's up 52%, but it's $30 off from where it was the IPO at $38. So yes, I think you see a move here. If you want to trade it, be nimble. But you do look at the relative strength index back in July. It was overbought. You're going to see it pull back here a little bit. But I would suggest staying away from this from a long-term investment. And I'm even afraid to trade it because who knows what fine may come out next on Robinhood.
All right. Very good point. So let's move on now to what I'm just going to call Barbie, because I think we're going to hear quite a lot about that. Warner Brothers Discovery post results before the bell tomorrow. They're staving off their December lows. We'll see if they're helped by the Max launch. And yes, the Barbie box office boost. Also, what those potential strike issues might mean for the content pipeline. You like WBD here?
I do like Warner Brothers here. My daughter wanted me to wear all pink today for this segment. But nonetheless, I think it's far away enough from that 52-week high you talked about earlier at 1765. And there's just a lot of technical strength. If you look at the 50-day and the 200-day moving averages, Kelly, it's about to have a breakout. So I think there's momentum. You're seeing people talk about Barbie, and it's not just, if you think of Warner Brothers, it's not just domestic. They have international scale and growth capabilities. We're talking about Barbie going to India, Oppenheimer, all these movies that are bringing people back into the brick and mortar component of going to a theater, that experience. I think there's a lot of trajectory to the upside. So I want to be a buyer here. I think you have to be considerate of where this has gone. Year to date outperforming, but still on a longer metric, it has some distance to make up here. So I think you can catch that as you go to Barbie, maybe for the second or third time, like I'm probably going to get dragged to.
I'm just looking at the stock, again, under $13 right now, and wondering if it's going to take something much more strategic to really get it going. The fact that it's under $13, even after this incredible box office run, again, you just wonder, can this kind of pure play, small scale streamer survive next to the likes of Netflix?
It's a great point, and Netflix obviously having a great year as well. So I think when you look at those side by side, they're complementary. And I'm a numbers guy, you know that. And to get a little geeky here, I think instead of looking at Barbie going up to $1 billion in global box sales, that's not the important number. The important number is where the 50-day and 200-day moving averages are lining up for potential breakout. You catch some shorts offside, you catch some underinvested, and you can have that rally. That's a dramatic move back up to that 52-week high, but it's not implausible when you see momentum come back into a name that was kind of left to the sideline post-COVID.